Bill Browder is the founder of Hermitage Capital Management. He joins us from London. Bill, good morning. We've got the ruble up slightly this morning, but down around 40% on the year. What sort of social and political fallout are we likely to see from this decline?
Well, to start out with, just mathematically, if the ruble is down 40% this year and Russia imports more than half of their consumer goods, then that means that half their consumer goods are dramatically more expensive. And so I would say the average person going into next year will probably, in real sort of economic terms, be sort of 25 to 30% worse off than they were a year before. And so that can't make people happy when people are basically given a big demotion or a big pay cut, which is what's happened across the board in Russia. People are not going to be happy.
But it's interesting because last week we saw a poll from the Associated Press which showed that most Russians still support President Putin and his policies. How do you explain that dichotomy there?
Well, I don't believe any poll that comes out of Russia, whether it comes from a Western or a Russian polling agency, for one simple reason. You have a dictatorship, a totalitarian regime where people who are adverse to the power get into trouble. And it's a place where everybody is paranoid. If you're contacted by a stranger who asks, do you support the president or not, there is no upside to saying you don't in Russia. And so I wouldn't believe a word that anyone says to a pollster in Russia, not because the polls are dishonest, but because people are going to be scared to give the honest answer in the poll. The other important thing to understand is that people haven't yet been hit with this economic fallout yet. The price rises are just coming through as we speak. And so I think the combination of dishonesty in the polling from people actually answering the polls combined with the future economic effect, and I would argue that most people probably wouldn't be particularly happy with what's going on in Russia right now. I mean, I can't imagine that anyone would be.
But, you know, not only do we have that weaker Russian currency, we've also got a big drop in oil prices. Of course, Russia, a big oil exporter. Is this going to force Putin to put more of a focus on what's going on inside Russia and pivot away potentially from the focus that we've seen on the Ukraine?
Well, actually, just the opposite. So if you look at what's happened, he started this whole thing in Ukraine because he was worried about his popularity. He saw the Ukrainian president, who was a kleptocrat like Putin is, getting overthrown by his people. And so Putin didn't want this contagion to affect him. And so he needed to start some kind of distraction, something to get people's mind off of his own corruption and the stagnation in the Russian economy. And that's what inspired him to go first into Crimea. And it worked beautifully in terms of his own political standing. He went from about a 55% approval rating up to 88% by taking Crimea. But once you take the genie out of the bottle and you sort of give people this sort of taste of nationalism, they want more. And so he had to carry on, which is what brought him into eastern Ukraine. And I would argue with the decline in the economics in Russia, he has no choice but to continue to stir the pot of nationalism and to get everybody all riled up and looking for an external enemy. And if you listen to his words in his press conference a couple days ago, that's what it was all about, was riling up people and talking about external enemies. So I don't see in any way that he's going to withdraw from Ukraine. He might make some very minor gestures to try to get the sanctions lifted, but he has no long-term intentions from withdrawing from Ukraine. And I would argue that he's probably going to start making mischief in other border areas as well, potentially the Baltics.
Now, do you think we'll potentially see, Western Europe potentially try and take a harder stand against Putin, potentially to try and stem any sort of contagion that we might see spreading over to Western Europe from Russia?
Well, right now we have a bunch of people in the West, both in America and in Europe, who have never really, in their heads of state, who have never really had to deal with sort of a megalomaniac dictator on the borders starting to take territory. And so everybody is a bit confused on how to deal with this. There's a lot of debate in different countries in Europe about what to do about it. And so I don't think you're going to see a hard line. I think everyone is just sort of desperately trying to figure out what to do, and that's not making it easy for for the West to come up with a cohesive position.
Now, apart from those sanctions, we've started to see some companies from the West start temporarily halting sales to Russia. We saw GM, we saw Audi doing this last week. Will we see more of this, and will we potentially see more luxury auto sales or more luxury products being sold as people try and convert those rubles before they become less valuable?
Well, so what we had last week was many Western companies didn't know what price to sell their goods at because it was all changing so quickly. I think that GM and Apple and all the people who have withdrawn their sales will quickly reinstall their sales at a different ruble price. And what you also saw last week was that Russians were panic buying, trying to get their money out of rubles into anything, into dollars or into effectively real assets, because there was no value to the ruble. I think that the panic is over, that the Russian government has decided to start spending central bank reserves to support the ruble, and so you've seen the ruble strengthen slightly in the last couple of days. I think you're going to see currency controls put in place, whether they're sort of overall currency controls or de facto currency controls. And in the end, I don't think any Russian is going to trust their currency at all going forward, because nobody knows where it's going to go and what crazy government policies are going to be issued in the future. And so you're going to see people at every step of the way, either legally or illegally, trying to get their rubles out of the country, because it's no longer considered in any Russian's mind to be a hard currency.
Which European banks do you feel have the largest exposure to Russia and could potentially get hurt the most from this decline?
Well, I don't have the numbers at my fingertips, but from what I understand, the French banks and the German banks are some of the most exposed. But I would also caution everybody in terms of panicking about Russian exposure, because the total exposure to Russia by European banks is relatively de minimis compared to the size of the banks. And so, I don't think this is going to cause a European banking crisis by any means. It might dent profits in a few banks that have more exposure.
Now, your firm takes a deep value approach to emerging markets. Now, do you see any opportunities right now in Russia, and what sectors would you be looking at as potentially places to invest?
I wouldn't put a penny into Russia right now. You might, as a trade, you might be able to make some money, because there's going to always be a, sort of the market last week was probably oversold in the short term. But I think Russia reminds me a lot of Venezuela 5 or 7 years ago, in the sense that as the economic crisis deepens, as the nationalism spreads, what Putin is going to be forced to do is impose more and more what I call anti-business policies, which may ultimately lead to nationalization of companies, as he needs money, which he's not going to get from the oil revenues, which he used to get before. And so I would say that Russia is purely a casino market at this point. It's not a place for investment, and it's not really a value market. It's probably a value trap, because it's the kind of thing which attracts people in because the numbers look cheap on current valuations, but it may not be so cheap if you don't own it in the future.
Now, you were in Russia during the crisis of the late 90s. How close are we to that today? Well,
there's a lot of differences and some similarities. The major difference, I would say, is that, and I say negative difference, is that in 1998, when everything melted down, you had the West that was sort of there to try to help. You had the IMF, you had the World Bank, et cetera. Now you've got a situation where Russia is melting down, and the West is not there to help. The West is there to sanction. And so Russians can't refinance the corporations can't refinance their debt in the United States or Europe. The Asians have no intention as a population of lending Russia money. And so they're in a deep hole where basically companies are going to have to default, and this is also not a government crisis. This will be a corporate debt crisis as it plays itself out. So I would say that in a certain way, the government has a lot less debt exposure, but the corporations have a lot more debt exposure, and there's not enough money in Russia to refinance their debt, and the West won't do it. And so you'll definitely see corporations defaulting in the future.
Bill, thank you so much for your time today. We appreciate it.
Thank you.
That was Bill Browder, founder of Hermitage Capital Management in New York. I'm Ruben Ramirez, and you're watching The Street.